You're first. All right. Thank you for having us, Beth, for putting this together. Apologize for not having a PowerPoint presentation, but what we could do is afterwards, if anyone like Nick and I can email you the slides you could have for your reference. Kind of just want to talk a little bit about some income techniques, and obviously coming around tax time, income reporting and tax deductions for independent contractors, freelancers such as yourself. Obviously the big thing is the difference between an independent contractor or an employee. The simple kind of look at the basic. An independent contractor, a freelancer, often receives a 1099 miscellaneous. That's how their income is reported. And an employee will get a W-2 from their employer. And for an independent contractor, they're responsible for calculating and remitting their payroll taxes, where an employee, they have their taxes taken out of their paychecks, every week, 2 times a month, and that gets remitted to the government by the employer. So kind of the differences between, an independent contractor and an employer, or excuse me, an employee. Oftentimes freelancers, they'll get a 1099 miscellaneous if in the course of a year they receive, $600 or more of income, from whoever hires them. And the IRS receives a copy of this 1099. So, even if, a client doesn't send you a 1099, it's still your responsibility to report that income. So some people say, well, I didn't get it, I don't have to report it. You may not have received that 1099, but the IRS does. So they'll come, they'll be coming looking for you. And a big thing that freelancers often face is having to file, make quarterly payments, often called, the clients that I deal with, they call them their quarterlies. And those are due April 15th, June 15th, September 15th, and the fourth quarter is actually due January 15th. In terms of filing the quarterlies, there was a topic that Beth and I talked about. Someone had brought up a question of, is there a way? Do I have to file my quarterly payments? Is there a way around it? And loosely speaking, for federal purposes, you must make. Talking about for 2015, freelancers are required to make quarterly estimated payments if, for 2015, they believe that their estimated tax liability, which is all their income less any withholding or credits, is going to be $1,000 for the year. For state purposes, for Illinois, it's kind of a smaller threshold, unfortunately, that for Illinois purposes, if you expect your tax liability for 2015 to be $500 for the year, you're going to have to file these quarterly payments. So what I can kind of guide you to is there's free worksheets, both on the irs.gov and the Illinois Department of Revenue, called estimated tax worksheets that can kind of help you kind of ballpark what you think your income is going to be for the year, and when determining your quarterly payments going forward, kind of a calculation you can do. On the same time, I'd be glad to issue and offer my services as a CPA to kind of walk you through. And a good starting point will be once you file your 2014, using that as a base for when you're figuring out, what should I be doing for 2015. How do independent contractors report their income? More times than not, it's on Schedule C of their 1040 of your individual return. And there are some areas where an independent contractor could file a Schedule C EZ. So as you may have guessed, it's kind of telling you that it's an easier form. That's a horrible tax joke. And who would qualify for that? If your business has business expenses of less than $5,000, you're not showing a loss, you didn't claim any business expenses for the use of your home. Basically, those are kind of the criteria you would have to meet to file this more simplified form. But more times than not, an independent contractor will use a Schedule C to report their income and expenses on their individual tax return. Now, some common business expenses that freelancers can claim, is one thing we always stress is keeping good records of your income and your expenses. Just in the case, you want to have, good log of your income, log of expenses, receipts, in the off chance that you might get audited. So, some common business expenses that freelancers, independent contractors will, deduct every year. If you have inventory, cost of goods sold, advertising, any car or truck expenses, you could take, actual or, there's a standard mileage deduction, which for 2015 is 57.5 cents for every business mile that you drive. You could report, take that. Commissions and fees, insurance, any mortgage interest you might pay on any property that you own for your part of business, legal and professional services, office expenses, rent, repairs and maintenance, supplies. So, looking at a W-2 employee, they don't have the leeway of, deducting those expenses. That's, kind of where, being as a freelancer and independent contractor, where you have that, kind of where you're able to, assuming you have, documented support for that, where you can claim these deductions every year as you filing your taxes. One of a big hot topic, I guess, kind of speak, is the home office deduction. A lot of people might work out of their home, and they might have a designated space, say a bedroom or an office in their room, in their house, that they work solely out of, and there's actually a deduction that you can take there. There are two requirements. If you have an office, an area of your home, your personal residence set aside, and it must be just for the exclusive use of your business, and it's your principal place of your business, there's a deduction you can take. Now, in the past, there was a convoluted process that some people really just didn't like to have to worry about, because what you would do is you would take the actual expenses that you spent, so utilities, repairs and maintenance, property taxes, and you would base that amount that you expensed, and the amount you would be able to deduct was kind of a ratio. You would take the square footage of your dwelling overall, and then you would take the square footage of your designated work area, and whatever the ratio of that, you would multiply by your expenses that you spent, and that was your deduction. Well, thankfully last year, starting with the 2013 taxes that were filed in 14, they decided to come up with a simplified method. And for that, they said that you could take up to 300 square feet and deduct, if your little office area was up to 300 square feet, you could take $5 per square foot. So $5 times 300, $1,500, that was your home office deduction. Now, if you have an area that's bigger than that, and you spent more than $1,500 normally on your related expenses, you can still do that in more complex form. But if you really wanted to go a simplified method, it's literally taking the square footage of your office, multiplying it by $5 per square foot, and up to $1,500, that's your home office deduction. So it was kind of a new change last year, and they brought it again for 2015. So it's something that might be relevant for you guys here tonight. And I guess lastly, what I could say is, I talked to Beth, just some tips to stay organized or get organized. Make sure you keep your freelance income separate from your other income. Keep good records of any 1099s you receive. And the way the calendar works, if you were to run a report of things that you received in a calendar year, for any 1099s that you may have received related to 2014, you've probably received them in January or February. So keep that in mind of these things that are coming in these last few months that apply to 2014. That'd be great for your record keeping. Keep track of all your business related expenses. One suggestion I give my clients is, if you normally prepare a Schedule C and you know what it looks like and it's available online, keep track of them in those categories. So, make sure you keep a folder or a log of all my advertising expenses, all my professional fees I paid, all the repairs and maintenance I did. It'll be easier come tax time, and if you have any questions, to be able to see, here's kind of tracking my expenses throughout the year. I often say, if you purchase equipment during the year, so computers or software or furniture, keep track of them separate, because there's depreciation involved, and you can track those as easier as well. And also keep track of any federal and state quarterlies that you make, because it'll be easier, and there can be kind of a trick up, because that fourth quarter payment isn't due until January. So again, if you're running a report based on the calendar year, you might miss one, but keeping a log of any federal and state quarterly payments you make will make the tax filing process hopefully a little less painful. So that's all I have. I'll pass it over to Nick, and at the end, we'd be glad to talk if any questions of the group might have.
Oop. All right, thank you. Is this coming in all right? Okay, great. To piggyback quickly on one thing Ken said, and I don't know if you find this with your clients, but I think especially before last year, the home office deduction was a thing that a lot of people miss or were confused about and didn't want to do it or didn't know how to do it. But it's a nice advantage to, if you qualify, to take advantage of, and an easier one now. Yeah, I think with now.
People didn't want to go the hassle of trying to figure out the square footage of their office, the square footage of the homes. That's why the IRS kind of came up with this call it a simplified method of just using, $5 per square foot up to 300 square feet. And so a lot of people, and I haven't seen the numbers, but that's what a lot of people, even my clients, that did back for the 2014 filing of 2013 tax, use this kind of simplified method. Save everyone a headache of having to dig up receipts and for that deduction alone. So.
Yeah, so we can talk more about that when we get to questions, but I just wanted to make that point that I've seen a lot of people not take advantage of it just because they wanted to avoid it or they weren't sure what to do. So talk to somebody like Ken and get that set up. So as Beth mentioned, my firm is Chicago Wealth Management. We do investment planning and financial planning for our clients. So I'm going to talk to you guys about some kind of basic concepts about investing, what it means to start saving early and often, and more specifically, retirement plan vehicles that might be available to 1099 income people, self-employed people, freelancers like yourself who don't have the advantage of a 401k at your workplace. And there's a few options that work really, really well. First of all, if you're not investing, I want to say that you need to be. Even if it's kind of a start slow, start small thing, the idea of compounding interest is extremely, extremely powerful. So I know one of the questions that Beth asked was, well, what about saving on a budget? I'm really tight, I'm not making a lot on the freelancing income. I'd recommend just starting small, $25 a month, $50 a month into an account that will build up over time. You guys will get this presentation, but I put together just a quick little graph to show the power of compounding. I took two hypothetical investors. One of them starts saving at age 30, one starts saving at age 35. So the guy who puts it off 5 years, this person's saving $5,000 a month with 7% rate of return per year. The guy who started saving earlier ends up with almost $800,000 at the end of his working years if he does that every year. Now 5,000 is a lot. You could make that a 500 a year number and you'd get the same effect. The person who waits 5 years only has 540,000. So you're talking hundreds of thousands of dollar difference because of that idea of compounding interest over time. So no matter what you can do, the better you'll be better off to save early and save often. Okay, where to do it and what to do with it. IRAs, that's probably something you've all heard of. Anybody who has earned income can save in an IRA. You can open an IRA at your bank, you can go to Vanguard or Fidelity, Charles Schwab, E-Trade, any of these online companies, and open an IRA very, very easily. So if you have earned income, you can do that. The downside of an IRA, you're capped at $5,500 a year of what you can put in it. $6,500 if you're over age 50. So if you have a really great year and you want to get more money put away than that, that's your limit on that. But anybody can do an IRA. It's very simple. There's no regulatory concerns to do it. And you can invest in the stock market. You can invest in bonds. You can invest in mutual funds and things that will grow over time through an IRA investment. Depending on what your income is, there's different tax treatments you can do, pre-tax or post-tax. That's kind of an individualized conversation. But the easiest one is an IRA. If you want to do something through your business, I have three main options that I think should be considered. The first one is a SEP IRA. This will allow you to get more money put away than that $5,500 limit. And the way it works, it's kind of a complex calculation, but the general idea is 25% of your net self-employment income. So you think about all your top line income, all your 1099s that come in, back out any business expenses that you have, and then 25% of that net number is going to be about what you can put into a SEP IRA. And that'll be deductible from your 1099. SEP, S-E-P. Stands for Simplified Employee Pension. So SEP IRA. And then that's a deduction for your business. So you figure out how much you can put in, then you go back and you can take a deduction for that amount. So it actually helps you both ways on the tax side. If you do really, really well and you have $250,000 of income, $200,000 of income, you can actually get $53,000 a year put away into a SEP IRA. So by opening a SEP, you can do a heck of a lot more than the IRA. Same idea for a solo 401k. This is a little different than a 401k that an employer would offer. Same kind of idea though. You can defer income that you make into this vehicle on a pre or post-tax basis and save. $18,000 a year is your wages that you can put in from your pay. You can also put additional money in that would be deductible to your business. Again, the limit's $53,000. So If you're at that IRA level, maybe that's the best way to go to start with and get something going. If you're at a level where you're making more than that and you think you can get more than that $5,000 in, you can do something else through your business to do it. Third and final one, simple IRA. And that's just how it sounds, simple. The big difference here is your net contribution limit is $12,500 of your pay. So it's a little bit lower than the 401k or the SEP IRA, but it's higher than the IRA. If you ever get to the point where you have employees with a simple, you have to offer them a match. So you have to give them a little bit of money too as part of the deal for having the plan. So really what the takeaway is, anybody can do an IRA. If you want to do something through your business, you have the ability to save a whole heck of a lot more than those kind of lower limits. We can talk more detail on that stuff. Each one of the plans has different requirements. The IRS wants you to file certain things for some of these plans. Of the ones I talked about, really only the solo 401k requires you to file what's called a Form 5500. And that's only after you get $250,000 in the plan. So it wouldn't be something starting up. You can't even put that much in. So the requirements are fairly low on most of these plans. They're really easy to implement, and they don't cost a whole heck of a lot. Less than a couple $100 really to administer any of these plans. You just open them up somewhere. I help clients do this all the time, where we open them up at Schwab or Fidelity. I mentioned the companies, Vanguard. Some of you may even have IRAs at places that you put money in. And we can talk about that too. When you have one of these accounts, what do you do with it? Where to invest? So depending how much money you have, you can invest in different mutual funds, stocks or bonds. ETFs is a very popular thing now. They're tend to be lower cost than mutual funds. But basically it's kind of stocks, bonds, alternatives like real estate, gold, currencies, and all those things get very daunting and hard to figure out. I recommend using mutual funds. If you have the ability to use mutual funds, use them. What a mutual fund is it's a pooled investment vehicle that has multiple stocks, multiple bonds, multiple underlying investments. So you can buy one share of a mutual fund and hold 3,000 companies that you see on the news every day being traded. I know I've spoken to Beth before, and I know that something that may be relevant to a lot of you guys is social investing. So if you start getting enough money put into a mutual fund, a lot of these funds have minimums of like $1,000, so you need to build up a little bit. But you'd be able to actually buy a mutual fund that wouldn't hold like a Walmart or something that wasn't very socially conscious. And it would still perform very well like the S&P 500 or like a large US company would. So that's an option too. And I can talk more about that too as we get down the road. But I know that's relevant for sure. So definitely go mutual fund if you have the ability to do it. If you have an account somewhere, Vanguard, wherever, I can help you do that. You can set it up at the bank. The problem with setting it up at the bank is you're going into cash, and you're not, that example I showed you about compounding interest, that's not doing much. It's just kind of your deposits because you're not going to be invested in anything. So that's pretty much what I've got, and I think Ken and I will just take questions. Fire away at us. Yeah.
Okay, so I have two questions actually, one for you and one for him. The first one is on the home office, and I agree with you, but because I always thought that the IRS would look at you a little closer if you were using that deduction, and I didn't want to get audited, so I but you said something really interesting, that the office area is exclusive to the business, so.
It's one of the main requirements, is it's a regular and exclusive use of your business is supposed to be. So it's, you know, your half is your child's nursery in your office. It's supposed to be something that's solely dedicated for running your business out.
Okay, thank you. And then do I have a question about Vanguard?
Yeah.
Because, like Fidelity is really comfortable to me because I can go to the Fidelity office, I can talk to somebody, I can give them money, I can not give them money, I can do that. With Vanguard, is it all online?
You can think of Fidelity and Vanguard, they're almost the same thing.
I mean, everybody says that, but I feel like Vanguard, when I looked into it, I felt like there were fees, I felt like it was, you know, there's not really a Vanguard office in Chicago that you go to, so you could go to somewhere.
You definitely can just open your own account. You don't have to have a Vanguard broker or advisor to open the thing. You do it online, but there's service to call. I've found for a lot of my clients, if they're not going to hire us that I'll say go to Vanguard because it's very cheap. Vanguard is the cheapest option.
Is it cheaper?
Their funds are generally cheaper than Fidelity. So you can use low-cost index funds. So I didn't really get into that, but there's active funds and there's index funds. So your index funds are going to be 3 to 4 times cheaper than your active mutual funds. So this is the mutual fund world that we're getting into a little bit.
That's my other question, because Fidelity, you don't actually see the fees, but you know they have to be making money somehow. So you're telling me what Fidelity isn't really transparent about is I would be paying less at a Vanguard then.
That both fees will be taken out the same way of a fund you hold. It's called an expense ratio. Any fund you own has a cost to holding it, and those fees just come out of the fund. It doesn't show up as an invoice to you, it doesn't show up on a statement or anything. But the Vanguard funds generally are cheaper than Fidelity, Schwab, almost all other funds. Vanguard's the cheapest.
Warren Buffett's a huge fan.
Yeah.
Vanguard, huge fan.
Like I said, if I have clients who don't want to hire me and I'm trying to just put them in the right direction, I say go open your IRA at Vanguard. This is the fund you should buy and do that.
Just picking up the phone and setting up accounts that way.
Yeah, we're doing it online. I know it sounds a little scary, but it's really easy. They're pretty smooth.
The fees, there's been a lot of movement in the government the last few years. There's been rulings that are more like fee disclosure. So you're supposed to have on your statement seeing what these quarterly fees are, so you're not just, they're not money's just going up. It's full disclosure. It's 408B2 is the it's more of being more transparency, so that the user can see what money's coming out of their accounts.
And the only problem with that is it still is a little daunting to find it if you get sent
It's just harder to,
yeah. So if you're shopping around for mutual funds, always look for the net expense ratio. That's what you're going to pay to hold the thing. So go ahead.
Yeah, another question on the home office. Insurance do you have to where you're living or take advantage of that?
It's available renting and homeowner and renting, but like we talked previously, it just has to be a designated area, like a designated room or a den or something like that. Well, den might be hard, it might be multi-purposes, but you can do it with renting too.
Go ahead. I think you're next.
Was a requirement years ago in home offices that somehow impacted your equity in the home? Has that disappeared now?
I do not know that as of late in the recent years. So it may have been something earlier. I have not come across that in the recent times.
Go ahead.
Just a question about common order. What is the logic behind it? Is it keeping everything organized?
Because government's a pay-as-you-go, so they won't let you just wait until April to pay in. So the thought is, if you're an employee, your employer's taking out your money every paycheck, they're paying it in. But if you're an independent working on your own, you're not making those payments, gradually. Exactly. So I've had clients who are, contractors working for themselves, and they don't pay in. We work on one together. That they don't pay in throughout the year, and then there's penalties or late penalties involved. And so it's a way to I always say the government's gonna get their money unfortunately anyway. But if you're paying them in quarterly, as you should be, why give more money in terms of underpayment penalties? And the IRS is a great tool with these worksheets. I can send you a link to that kind of walks you through to kind of project out, because like I said, using your 2014, after you file your 2014 return, using it kind of as your basis, your starting point to kind of see, project what you should be paying in quarterly. So they have great tools to walk you through it. It's awesome. So.
Go ahead.
Much fair share of the mic, but
Oh yeah.
Sorry.
come closer. Don't want to ignore it. Don't want to miss it.
Go ahead.
Do you have a question? Okay. Can either of you touch on advantages, disadvantages of filing as being a sole proprietor, being forming an LLC? I guess that would be more of a tax standpoint.
Yeah, I mean, it really just depends on what you're looking for. I always.
You don't have to go there.
Some people find it just more simplified just to do a sole proprietor and just report everything on their, on their own 1040. Others, depending on how they want to, develop, grow the business and any future growth, as far as liability, might want to go the LLC route. So really just depends on what your growth plan is with the organization. Is where to limit it.
Yeah, and I mean, I would say even at a very low level, it does generally make sense to be an LLC for that liability protection that Ken talked about. And it's cheap enough to do where you can literally spend $150 and file for an LLC.
Is there a difference as far as the number of tax forms you have to deal with an LLC?
Just the initial startup is the original, yeah.
Okay.
So
then everything's done under that employer ID number or whatever they issue you instead of using your own social security.
Yeah. So you're registering, paying a filing fee, as Nick said.
I don't know, is that right? 150 now?
150.
You can get
It's
it.
been,
I've seen it that low.
yeah. It's been 150 past.
Is that one time?
Yes. But there might be, there are sometimes annual, if you need annual reports, but the filing fee, the initial is the one time.
Ken, could you discuss categories that we would keep? When do we decide to break something out into separate categories? We have writers, photographers, and videographers here. So I mean, it's a little bit different because people in audio-visual get more expenses on things like camera equipment.
Yeah, so what I always say is, because more times than not, you're going to use that Schedule C. So it's kind of looking ahead to see, and it's a pre-printed form like any on your tax return, and it lists out kind of the areas and how you'd have to classify. So obviously, if you were to classify everything as other, more of a red flag and chance for an audit. So that's why I always say if you're keeping your expenses, kind of being able to track down, like this line item is going to be all my office expenses. So tracking it in that regard, so being able. So I always tell my clients, keep, how your end result, your end form is going to look like, but just try and track, whether you're using a QuickBooks or a Quicken or just spreadsheets. Kind of follow these in because it's going to make reporting it at the end a lot easier. But I don't know if I answered your question, so.
No.
Okay.
You did. So let's change it around.
Okay, sure.
If I came to you for advice, how would you, if it's the first time, you'd say, okay, you're forming a sole proprietorship or an LLC, I want you to track your expenses like this. What categories would you say to break them down?
I mean, I would, if you were probably, equipment, any labor costs, if you're doing like reproduction or anything, I guess pretty much I would have to know what kind of business you're looking for. So, obviously the income's income, but, what's easiest for, I guess I would ask you, what are your normal expenses you're expecting to incur? So is it, I have a lot of stuff I do in printing and office expenses and tracking it that way. So I really guess I would have to know. And travel.
Travel's a big one.
Travel's big probably for, people who, photographers and, videographers, any travel costs, hotels, airfare, meals and entertainment. 50% of that's tax deductible. So I guess I really would want to know, specifically, what you're expecting to spend in a year. What are your normal, in a normal course of business, what kind of expenses are you seeing? And that might be easier to kind of break down a category.
Follow up, what program you'd like to see present this material to you?
My clients are split. A lot of them just use Excel spreadsheets, and I always, if they're good with Excel and using a spreadsheet, that's perfectly fine. Others try to use QuickBooks or Quicken, Quicken more on I tend to see more people using QuickBooks, but then they're just using it for tracking income and expense. So they're not really trying to using like the balance sheet, here's your assets, your liabilities, but it's just kind of using, because with QuickBooks you can set up classification of your expenses. So something like you're saying, having all these expenses, for printing or travel, using that. But a lot of my clients just use a regular Excel or Lotus Notes spreadsheets and tracking it all there because that's what they're used to. And if it's not broke, why fix it?
So I can add to that. Our office is a small office. We have 4 total employees, and we use QuickBooks and QuickBooks Online for everything. But we use another program that is free. It's called Expensify, and that's a good Expensify. And it's an all web-based It's a web-based thing. There's a phone app for it, so you can scan receipts if you have them, and it produces pretty slick expense reports for you. And our office manager integrates it with QuickBooks and matches up the categories, and that works pretty well as a low-cost way to do it. So don't know if you've seen or heard of that one yet. So,
Is there a possibility of putting together some examples of columns that you would like to see from a photographer or from a reporter?
Sure,
And
I
we
could-
could pass it around.
Yeah, no, I don't. Yeah,
That
definitely.
way, not everyone has a lot of experience. Some customers recently thrust into it.
Yeah, no, I can definitely do that. Man, send it to Beth. We'll put it together. Hey, Beth.
I actually have a question. I only do a handful of freelance gigs a year, so I haven't set up as an LLC. And the last gig I took was a personal check, no W-9. Am I risking serious trouble if I don't report all these jobs that don't come with a W-9?
How much?
Because I have a full-time job, so this is supplementary.
Okay.
And the last gig I did was only $100.
I mean, you could probably just put it, when you're filing your return, there's just, another income line rather than, worrying about a Schedule C. So you could just probably do that. 150 probably not going to cause big, but usually 600 is the big threshold on when, companies are required to issue a 1099.
Did anyone discuss the Obamacare and all that
Can't hear the question.
It was about Obamacare, how that would affect
in terms of if you have to,
I mean, who would I need to present to my tax preparers with
so you bought a policy on the exchange, and okay. I mean, I think just proof that you are on the exchange, so you don't have the penalty for not having insurance, the $95 for the